Ladies and gentlemen, welcome back to the channel. The stock market is exploding higher today. We have a ton of breaking news to go over, and some of it sounds really good. We expected this rally, but what's coming next? That's important. Hit the like button, subscribe to the channel, check the link out down below in the description of today's episode if you guys want to come join the trading community. Come find these under the radar AI stocks with us and hopefully make a lot of money. That link is down below in the description of today's episode, but with that said, let's get started. Okay, so we can see today, just looking at the broader indexes, the Dow is up 0.4%, S&P is up 1.26%, NASDAQ up 2.23%, Russell 2000 is up 1.5%, and the VIX is down 9%. Rate cut odds are surging higher today, from 67.3% chance of a rate cut December 10th, this was on Friday, to almost 74%, and it's because of Fed Waller. He is supporting a rate cut December 10th, alongside Fed Williams, Fed Moran, likely Fed Bowman. Fed Hammock and Fed Cook say that they're kind of suggesting they're open to it, saying that they have an open mind heading into all Fed meetings. We'll get to that in just a moment, but first, U.S. Commerce Secretary Lutnick says, I am seeking an enhance to the U.S.-EU trade deal. Lutnick says that talks with China will work their way through. Lutnick on Saudi chip deal says this could be used as a model for others, and he says that he is confident the best U.S. chips won't fall into the wrong hands. Deutsche Bank today set their 2026 S&P 500 target at 7,000. Deutsche Bank expects the S&P to reach 7,000 by or 8,000 by mid to end 2026. The most bullish call on Wall Street. Strategist Matthew Lazzetti cites rapid AI investment as a key driver of market sentiment and productivity gains, though the bank warns of continued volatility. The U.S. economy is forecast to reaccelerate as trade uncertainty eases and tax cuts lift incomes, with S&P 500 earnings projected at $320. Germany is expected to post a strong rebound, Europe to slow slightly before improving, China to moderate, and India to continue its rise. Inflation should keep easing, with Deutsche Bank expecting 2 Fed rate cuts and ECB staying on hold until at least mid-2027. Lutnick was asked about the steel and aluminum tariffs for the EU. He says there's a list of conditions for any steel and aluminum deal with the EU. Lutnick says we want the EU to take the foot off of the digital rules framework as well. Lutnick says that decisions like the one on NVIDIA chips fall on Trump's desk, so he makes the decisions on that. JP Morgan says that Brent oil may fall into the 30s in 2027 on surplus. So that would be kind of wild. I mean, gas would be $2 a gallon, roughly, maybe a little bit less in southern states. That would be a big help to this economy. Morgan Stanley's Mike Wilson says buy the dip now for 2026 gains. He says the current stock market pressure is a tactical correction caused by Fed liquidity jitters, not fundamental deterioration. He says the damage under the surface suggests the correction is nearing its end. Wilson remains highly bullish, expecting the Fed to cut rates and forecasting 17% EPS growth in 2026. He says use this weakness as a chance to buy, with focus areas where he's overweight, small caps, consumer discretionary, healthcare, industrials, and financials. Now, Fed Waller really made the headlines today. He says most private sector data says the job market is soft. He says since the last Fed meeting, available data suggests not much has changed. Inflation, not a big problem, with the labor market that is weak. And he says here that he is advocating for a rate cut at the December meeting. He says, quote, my concern is the labor market. I'm advocating for a rate cut. It says January will be tricky with a flood of data coming to indicate whether another cut is appropriate and need a meeting by meeting approach after the December 10th cut. Fed Waller says, I still do not think labor market will turn around in the next few weeks. He says, if the data shows a rebound, we can be cautious. And he says the September jobs number likely to be revised down. Fact that it was concentrated is not a good sign. FedWaller says there is no anecdotal evidence that firms are about to go on a hiring spree. He says that inflation has ticked up, but think it is going to start coming down. He says ex-tariff inflation is around 2.5 or 2.4%. And he says that inflation has ticked up, but he thinks it is going to start coming down. He says that job growth concentration in two sectors is not a good sign. And he says he talked to Besant 10 days ago and had another great meeting talking about economics and markets. He says that tariff inflation impact is not that big and will be one-off. Rollins says that China started buying U.S. soybeans almost immediately. A Bank of America says Nvidia's stock drop is due to, quote, misreading the numbers. Bank of America says Nvidia's recent pullback is driven by investors misinterpreting its quarterly results. Analyst Vivek Arya urged clients to focus on strong demand and a 60% quarter-over-quarter jump in free cash flow to over $22 billion. Bank of America dismissed concerns about receivables and inventory, noting days sales outstanding improved slightly and inventory is rising as Nvidia ramps shipments of complex Blackwell systems. Goldman Sachs says today they see a downside risk for the economy next year. Goldman Sachs economists expect the Fed to cut rates in December, followed by a few more cuts in 2025, bringing rates just above 3%. Chief economist Dan Hatzius warns the economy could slow more than expected, requiring additional cuts. Despite September's 119,000 new jobs, rising layoffs suggest labor market weakness may be becoming entrenched, limiting the impact of modest growth, which is kind of wild because all the provisions to the big beautiful bill start to kick in next year. No tax on tips, no tax on overtime, up to certain thresholds are going to save families thousands of dollars. If the real estate market gets more active, you're going to see a lot of money hitting people's bank accounts. So, again, this is kind of a weird take, right? It's not, I think it's really just looking at one side of the equation here, but the consumer should get better next year. Almost certainly. It's going to be hard to get worse from a consumer perspective next year. Now, if the labor market were to, continue to weaken or there were some kind of shock event from here, that's one thing. But at this point, it's hard to wrap my mind around how the economy gets worse next year. Donald Trump says the full benefits of tariffs have not been calculated yet. Now, Trump says he is weighing advanced Nvidia chip sales to China. And this morning, China's President Xi and Trump held a phone call. China's president to Trump says that China-U.S. relations maintain positive momentum. He says that both sides should expand the list of cooperation. And China's president clarified China's position on the Taiwan issue. China's president says that they should strive for more progress in bilateral ties. And he says should open new space for cooperation. President Xi of China says a return of Taiwan to China is a key part of the post-war order. So this is obviously good when the number one, number two economies of the world that are very interconnected are saying positive things, trying to work together on further developing both countries. I mean, there's no negatives to that. It's all positives. And that's one reason why I would imagine markets are doing a little bit better today. Among other reasons, like Bitcoin, as we talked about, that is finally stabilized, that is no longer just crashing into oblivion. You've actually worked higher, about $7,000 per coin on Bitcoin from the low. So the margin call liquidity situation getting a little bit better. The odds of a rate cut December 10th becoming a little bit more certain. We just came off of good Walmart earnings, good Nvidia earnings, good economic data. Now you have positive headlines from Trump and China. There's not a lot to be negative on right now. It looks like a year-end rally is really starting to show itself. JP Morgan's Erdos has said that AI isn't a bubble, but rather an opportunity. Now, in a little bit of bad news or maybe weird news, It says here, according to Fox News, that Venezuela covert actions could begin soon. According to a BMO survey, holiday sales growth to be slower in 2025. BMO Capital's survey of 1,000 U.S. consumers finds holiday spending will rise more modestly this year. Only 50% plan to increase spending, down from 62% last year, while 24% plan to cut back, reflecting a 3.5 year low in consumer confidence. From what I've seen so far, holiday shopping season is doing just fine. I mean, these places are packed with people. And we have another rescheduling of economic data. U.S. September PCE personal income reports are rescheduled for December 5th. So it seems like this is just a pattern at this point. Just reschedule and reschedule and reschedule. We did have a little bit of economic data today. Dallas Fed Manufacturing Index came in at negative 10.4. The forecast was negative 1. So it did come in quite a bit worse than expected. Tomorrow is a much bigger day. You have the ADP employment change weekly, expecting negative 2.5 thousand jobs. The week before was negative over 11,000 jobs. So this trajectory would mean that you're probably going to go positive in the data tomorrow. We'll see. As long as it's not too bad or too good, things are going to stay the same for, rate cut odds. And honestly, at this point, Fed Williams, Fed Waller, Fed Moran, Fed Bowman, they're supporting a rate cut. Fed Hammock, Fed Collins is it, are kind of neutral. Bostic, Kashgari, they're probably team no rate cut, but you're starting to get team rate cut really outpacing team pause. So I don't know how much at this point these economic data sets are really going to change the Fed's officials that want to rate cuts opinion, right? I just don't see that this soon before a Fed meeting. And you're going to enter the Fed's blackout period in the not so distant future. Like, I believe next week you're not going to get any Fed speakers until Jerome Powell on December 10th. So we'll see. PPI tomorrow is expected at 0.3% month over month. Retail sales month over month for September are projected at 0.4%, and core PPI month over month projected at 0.3%. You're going to get CB consumer confidence, pending home sales month over month and year over year, business inventories month over month, Dallas Fed Services Index, Dallas Fed Manufacturing Index, 5-year bond auction, and some other smaller data sets. Now, again, we are largely done with earnings season, but today and tomorrow, you're going to have some earnings that the markets will react to. Today and after hours, Symbotic, Zoom, Semtech, and Agilent Technologies. Tomorrow morning, Alibaba, Neo, Abercrombie & Fitch, Analog Devices, Kohl's, Best Buy, Pony AI, Burlington, and in after hours tomorrow, you have Dell, CleanSpark, Workday, Zscaler, Autodesk, Ambarella, PagerDuty, Urban Outfitters, NetApp, and then Wednesday pre-market, you have John Deere. Now, the CNN Fear and Greed Index is improving a bit today to 14. Friday, your close was 10. At the low of the day on Friday for markets, this was at 6. So you've seen an improvement from 6, but you're still very low as far as investor sentiment. People are still very bearish out there. Market momentum is fear, stock price strength, extreme fear, stock price breadth, extreme fear, put and call options, extreme fear. Market volatility is now neutral, safe haven demand, extreme fear, and junk bond demand in extreme fear as well. We had a new AI investor sentiment survey on Thursday, showing bearish investors at 43.6%, neutral investors at 23.9%, and bullish investors at 32.6%. So, again, showing a lot of bears out there. Okay, now the percent of stocks trading above their 50-day moving average, surprisingly not going up that much today, only up 1.34% to 38.5%. So only 38.5% of stocks are trading above their 50-day moving average. A median point really over the last 5 years is like 50 to 60%, right? That's kind of the median for what percentage of stocks trade above their 50-day moving average in like a normal market. So you've been at pretty correctionary levels recently in the low 30s, and there's a lot of room to strengthen here. So, based on all we've talked about in today's episode, it's really hard to be bearish on this market. It's been really hard to be bearish on this market for a while. Again, Walmart earnings were great. Holiday shopping seems to be going just fine. Economy and labor market seem to be doing just fine. Nvidia smashed earnings. Now we're looking at a rate cut December 10th. There's not a whole lot to not like. And things from an economic perspective, consumer perspective, should be getting better next year as real estate picks up. Provisions, again, from the big, beautiful bill start to kick in. And from a tactical perspective, Wall Street is really underweight this market. They've been a net seller of stocks for a long time now. They're underperforming the S&P as they typically do. It would seem like there's going to be a chase into year end. And that is what I'm positioned for. Now, some of the quality AI stocks are going to be some of the ones that do the best, in my opinion. Like, quantum and nuclear, while long-term those are great. But what about the next 3 to 5 years? Wall Street still wants something soon, right? This is not a 2021 market where rates are zero, money is everywhere, like literally everything's going up. There's going to be certain areas of this market that do a lot better than others over the next couple of months. And those are the areas that we are targeting, the ones that are going to do better over the next couple of months, and investing in those. Small cap AI, software, I think, autonomy, right? Real world AI, like robotics, is going to be huge as well. And that's another area that I'm looking to capitalize on in the near-term future. But I do think this is the official start of the Santa Claus rally, or year-end rally, if you will, the chase that Wall Street is going to start participating in. And it definitely helps that crypto has been able to find its footing a bit, with Bitcoin to $88,400 from its low of $80,700. That's a big improvement. So with all of this said, let me know your thoughts on this down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. Have a great rest of your day, and I will see you in the next one.